Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Semiconductor Manufacturing International Corporation, latest report. Semiconductor Manufacturing International Corporation, SMIC, offers a diverse range of businesses and services. At its core, the company manufactures and sells integrated circuits, wafers, and compound semiconductors in key regions such as the United States, China, and Eurasia. In addition to manufacturing, SMIC provides semiconductor foundry and technology services, which enable other companies to design and produce their own semiconductor products without having to invest heavily in infrastructure. The company also offers supporting services like design and IP support, photomask manufacturing, and technical services related to integrated circuits. Furthermore, SMIC engages in research and development activities to stay ahead of the curve in the rapidly evolving semiconductor industry. Its marketing-related services help customers navigate the complex world of semiconductors and find the right products for their needs. The company also offers private education services, providing training and expertise to individuals and organizations looking to improve their knowledge and skills in the field. Overall, SMIC's comprehensive range of businesses and services makes it a one-stop shop for companies and individuals seeking semiconductor solutions. The significant increase in SMIC stock price over the past year can be attributed to several key factors. One major contributor was the strategic acquisitions and capital injections made by the company in late 2025. The acquisition of Semiconductor Manufacturing North China, SMIC North, for approximately CNY 40.6 billion is expected to boost SMIC's attributable net profit, while the substantial capital increase from China's Big Fund Phase III and 6 major state-owned banks will support SMIC South's focus on advanced technologies. In addition to these strategic moves, SMIC's robust financial performance in Q4 2025 and full year 2025 also played a crucial role. The company reported a 60.7% year-on-year jump in fourth quarter profit, exceeding analyst expectations, and revenue for Q4 2025 increased by 12.8%. Furthermore, the high-capacity utilization rate of 95.7% in Q4 2025 and 93.5% for the full year 2025 is a testament to strong demand and a localization shift within China's semiconductor supply chain. The company's focus on artificial intelligence, AI, has also been a significant driver of growth, with SMIC identifying AI as a strategic market in early 2025. The mass production of products like 180 nm BCD power management chips for AI server clients has contributed to the company's revenue and profitability. Lastly, SMIC's growth aligns with China's broader objective of achieving a more self-reliant semiconductor ecosystem amid international technology restrictions, further supporting the company's stock price increase. Semiconductor Manufacturing International Corporation market capitalization of $692 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Semiconductor Manufacturing International Corporation holds a significant advantage in their industry. Semiconductor Manufacturing International Corporation trades at a higher price-to-earnings ratio of 130 times and a higher price-to-book ratio of 3.44 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 35% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. Net income experienced a significant fluctuation between 2024 and 2025. Initially, it increased by 39.1% from $492.7 million in 2024 to $685.1 million in 2025. However, this growth was short-lived as net income decreased by -8.5% quarter-over-quarter, (QoQ), and -35.5% year-over-year, (YoY). Profit margins also underwent a notable change during the period. The gross margin declined from 22.6% in 4Q24 to 19.2% in 4Q25, indicating a decrease of 3.4 percentage points over this time frame. Furthermore, the profit margin increased by 3 percentage points to 21% in 2025 compared to the previous year. Nevertheless, it is expected to range between 18% and 20% in 2026, suggesting a potential decrease in future profitability. The company's financial performance indicates a positive trend in its operating cash flow. The data shows that the net cash generated from operating activities for both the fourth quarter of 2025 and the year-end on December 31, 2025 is consistent at $1,343,934. This consistency suggests a stable and healthy cash inflow from operations, which is a crucial indicator of a company's financial health. The company's financial situation has undergone some notable changes. A review of the extracted summaries reveals that the total debt and borrowings have seen significant increases. The total debt has risen by $1,076,013, while borrowings have increased by $2,082,095. Furthermore, net debt has also experienced a substantial increase of $525,029. These figures suggest that the company's financial obligations have grown substantially. However, there is no clear indication that interest expenses have changed significantly, indicating that the company may be managing its debt effectively despite the increased borrowing. Management is providing a cautious outlook for the company's revenue, expecting it to remain flat on a sequential basis. However, they are confident that the company will continue to outperform its industry peers in terms of revenue growth within the same markets. In terms of profitability, management is guiding for gross margins to range between 18% and 20%. This suggests that the company is focused on maintaining a stable level of profitability despite any fluctuations in revenue. Additionally, capital expenditure is expected to remain roughly flat compared to last year, indicating that the company is prioritizing cost control and efficiency. Overall, management's guidance suggests a focus on stability and consistency, with an emphasis on maintaining market share and controlling costs. That concludes the financial summary for Semiconductor Manufacturing International Corporation. Feel free to comment below, and I will be happy to answer them when possible.